The Get Rich Slow Club podcast is a collaboration between Tash Etschmann from Tash Invests and Ana Kresina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast,
where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us. Today on the show, we have Ibrahim Hussein. Ibrahim is currently the head of exchange-traded funds, ETFs, services at Computershare Australia. Founded in 1978, Computershare is an ASX 50 company and a world leader in financial administration with operations spanning more than 20 countries.
I'm very excited for today's episode because we're going to explore what a share registry is, some common questions, and then dive into some really interesting ETF insights. There were a few terms that we mentioned that we didn't define as we go. One of them was retail investor. That's you, me, Ana, all of us. A retail investor is a non-professional investor who buys and sells securities, managed funds, or ETFs through a brokerage firm.
We also discuss custodial, and that just means a person who's responsible for taking care of or protecting something. We usually refer to it as a type of account holding through a broker, but it is also used to mean a few different types of custodians in this chat. So not to be confused in terms of a custodial broker, but there's also just a lot of different other custodians that we refer to. Okay, let's get into it. So we're very excited to start off the show, but before we do, we're going to do our money memories or money moments. Sorry, money moments. Yeah, we changed the name just recently, Ibrahim. So it used to be money wins and losses. Now it's money moments. Yeah. And we'll kick it off with you. What's yours for the week?
Yeah, look, with your permission, I would like to change the word money with value, if that's okay.
Value, love it.
Kind of share with you something that I've done personally. It's still a journey, still a work in progress, but something that I've done in the last few years. And it's really something that I believe a lot of people are ignoring, which is really our kind of health, both physical and mental. I mean, if you think about it, the reason we exist, the reason we do what we do is because we are mentally and health, and physically well to do that. But yet we tend to kind of keep it in the back burner. When we go to school and study business, one of the concepts that gets drummed on us is the time value of money, right? Which simply means that, the money today is worth more than tomorrow because of that potential for that money to be reinvested. And the same thing applies to health, right? What you invest in the health today will pay you off in the future. And I think we've kind of ignored that. We use the fact that we are time poor as an excuse to kind of ignore that part of our existing, which is very important. And I think to me, the sliding door moment was the pandemic, where, we were working from home and your laptop is on 24/7. And I think we're not working from, we were actually living at work. That's the best way to describe it. And then you're leaving the family, yet you don't get to see them. And I think that was the moment when I realized, look, I need to do something about it. And using an excuse that we're time poor. I mean, if you look at the amount of time you're using for your downtime, if you've got an hour to watch your favorite Netflix episode, you've got 30 minutes to go for a walk or a run. So I have deliberately set a routine which allows me to do all the things that I want to do physically. I've got 3 young kids under the age of 9, so I was never a morning person, but I've been forced to be a morning person. When this morning I woke up and went for a run, and I came back before the kids were awake, and I was ready to get them to school, first day of school. So I think that has allowed me to do that. And I think you don't have to have a perfect equilibrium. It doesn't have to be 50 and 50. You just kind of have to find something that works for you. And for me, it's still work in progress, but I'm in a much better place today than I was a few years back. So that's, in a nutshell, what I wanted to share with you.
Oh, that's amazing. That's such a good money. What is it, a value? The value of the week? Yeah. I love that one.
Look, I think, and in my opinion, if you get that right, then everything else will fall into place, right? So.
Yeah, I find that as well when I am better at sticking to my routine and going to Pilates and going for my walks and seeing people, like my work is so much easier than when I forget all of that stuff. But it's so easy to be like, oh, I'm too busy, I won't go for a walk today. And everything else is so much harder.
Yes.
Health is wealth. Health is wealth.
Yeah,
but I resonate with that too, because it's so hard to find time with kids. I'm sure. I'm sure when you have 3, you have 1 extra than I do. It's so hard, and if you neglect yourself, it has a trickle-on effect to the rest of your family.
Yeah, and another tip that I have as well is, there are times where you don't have time to do what you need to do. But I found that when I get to that point, I will look in my diary. There'll always be 2 or 3 meetings that I'm a mere spectator, that I'm not adding any value to those meetings. So I'll politely decline them and give that time to myself. So that's just another tip out there.
Good productivity hacks as well.
Yeah, and such a good role model as a leader as well. Being like, I'm not needed. I'm not going to go to that.
Yeah, I trust you guys can figure it out yourselves without me. Tash, what's your money moment or value of the week?
Yeah, not as deep and great as that one. But mine is, I've been really against paying off my HECS debt early. I've always thought it was just like my money is better off in other places. But I've been thinking about buying another property this year, and I only have like $18,000 left on my HECS debt. So I've started paying it off. But I tried to use Zip Pay because you can use your credit card to earn points without any fees, which is great because I'm paying off like 10 to 18 grand. I'd love to earn all those points, but they locked my account after paying off like $1,000. So I earned like maybe 1,500 points. Yeah. But we'll see.
Why did they lock your account? They're like, you shouldn't do this for HECS, or long story?
No, they want me to they want to validate that I'm not using a stolen credit card. So they want me to call up and validate like the transaction number, I think. But I think it's almost like a bit of a hack, and they're not charging fees for it. They just flagged it and they're like, oh no, stop doing this. Too many, because obviously they're not making any money from me doing that.
Oh my gosh. Yeah.
But loophole for now.
Mine is, I don't know if I mentioned this in another episode, or if we pre-recorded it, but I spent money on getting a Microsoft subscription in order to edit our book. And it was $139. And I called them up to try to cancel it. And they said that they have a policy that if it's over 30 days that you can't get reimbursed for, even though I paid the full year up front. So I'm back and forth with customer service. And then they said, well, the way you can do it is if you contact your bank and say that this is a disputed fee, you can get your money back that way. So long story short, by trying to save myself money, by paying for the whole year up front and trying to get my money back, I have spent an hour and a half on customer service calls, not value for my time, going back to this, just to get this money back. And I still haven't gotten it back. I had to fill out a form to dispute this fund. And anyways, long story short, my time is more valuable than chasing up that money, but I am determined to get that money back. So this is a very good lesson for myself in terms of my time value. So
the opportunity cost, yeah.
Yeah, I always get stuck looking for the best deal on something, and then I've realized I spent 2 hours trying to save maybe $20, and it's probably not worth it.
Yeah. But let's kick it off to other more important things, such as share registry. So we've talked in a couple different episodes about a share registry and what a share registry is. But for those who have absolutely no clue, what is a share registry and why is it important?
Excellent. That's good. Happy to talk about it. And hopefully I'll explain that in a very simple term. So put it simply, a company that is listed on a stock exchange is required to keep a register of their shareholders as well as the number of holders that they own. So a share registry's core function is to maintain the register of the shareholders, and most importantly, to also maintain the ownership or the legal ownership of the shares as those shares change hands, as holders buy and sell on a daily basis. So in Australia, it's mandatory for a company to employ a share registry service provider when they list. So your viewers will be, or your listeners will be familiar with the share registry provider if they have invested in a stock exchange, because all the correspondence and engagement will be done by the share registry on behalf of the issuer. But apart from the maintaining the shareholding records, and because the share registry is the custodian, if you like, of the records, typically they would engage with the investor on behalf of the company or the issuer. So if a company requires to pay a dividend, for example, the share registry would do that on behalf of the company. If they are running an AGM, the share registry would undertake all the requisite communication to investors as they pertain to the AGM. Same applies to corporate actions, capital raisings, share buybacks, etc. So the share registry play a very important role as a conduit between the listed company and the shareholder. And Computershare, that's how we started. In fact, Computershare started as a fintech. It's one of the first fintechs in Australia, actually.
Oh, wow.
Wow, amazing.
It's one of the most, in my opinion, great Aussie stories, if you like, because the company started as a fintech back in 1978 in Melbourne. And today we've got offices in 22 countries around the world. We look after 75 million shareholder records with over 25,000 clients. So Share Registry, having been the core of the business, but the Computershare as an organization has diversified its business and products around the world, where we offer services such as employee share plan, corporate trust services, to name but a few. Yeah, we got listed in 1994 with a market capitalization of 36 million. Today, I think I looked the other day, in the ASX 50 companies, we're at number 32 at around over 16 billion, market cap. So it's a remarkable story, in my opinion.
Yeah, incredible. 1978, is that when you started, you said?
Yes.
What did a share registry look like back then? Was it lots of like filing cabinets with bits of paper?
Yeah. Look, I think at the time we were providing, it was a technology services, a fintech to Share Registry Bureau. So we actually providing services to registries, which at the time they were done by accounting firms. Then going down, further down the road, Computershare acquired some of those businesses to actually start undertaking the actual registry business ourselves. But we started by offering technology services to the firms that were doing the share registry. But it was very paper-based, as you would imagine. Yeah, because you used to have the actual share certificates back in the day.
Yeah, completely different to now. I use an analogy when I explain brokers and ETFs to people where it's like the broker is Woolies or Coles or Costco, and the ETF is like a Favourites or a Roses box, and individual shares are like a Kit Kat or maybe a Flake or something like that. Can you help me find a way to put a share registry in that analogy? Like, is there some kind of way to explain where the share registry fits in like the shopping process, or is it like too far removed?
Look, I think probably the best way to explain is maybe using a Venn diagram analogy, if you like. So if you have a Venn diagram of the capital markets in Australia, where you've got the stock exchange in one circle, you've got brokers in one circle, you've got the ETF product issuers in one circle, and you have the investor in one circle, the share registry will be the intersect. So it will be in the middle of that ecosystem, connecting all those participants. Now, the broker is the party that the investor will go and buy or sell the securities from. And once you do that, as I mentioned at the top of the call, those records then are sent to us for us to maintain, right? So we are at the heart of that ecosystem, if you like, where we're connecting the issuers, the buyers, and the brokers through the stock exchange, if that makes sense.
Like the receipt? Like, can you be the receipt? Like the record keeping?
I like the heart, though. The heart one's great.
Yeah, we're the heartbeat of this whole ecosystem.
The heartbeat,
A little bit biased in my analysis of that, but that's the truth. I mean, we are right at the epicenter of that ecosystem, for lack of a better term. Yeah.
Amazing. I know you have some great ETF data, but we've got some community questions first. Do you want to kick it off with one of those, Ana?
Yes. One of the first one is, what is an overseas market equivalent of share registry? So, for example, can you transfer US or UK shares from broker to broker is one of the questions that we've gotten.
Yeah. Look, the share registry is the term that is very familiar in the Aussie market. In other market, the equivalent of that would be a stock transfer agency. So those words are used interchangeably. And if I get the question right, so if someone is trading overseas using a broker, say US market, right, using a stock transfer agency, Computershare is a stock transfer agency. And the question, if I got it right, they want to move from broker A within the same market to broker B in the same market. Is that the question?
I think it was like, can you transfer from US to UK maybe?
No. So it depends. So what happens is the only way you could transfer shares across markets if the stocks are trading in those two markets. So if you have a dual trading example where a company is listed in London as well as New York, there are provisions to actually move the stock between the two countries. So Computershare provides the cross-border movement of stock for those dual listed companies. There are a lot of companies in Australia, for example, that are listed here in the US, and News Corp is probably one of them as an example. So you could effectively transfer the securities from one market to another in those scenarios. But if in this example that you've just given me, if the stock is not listed in London, but listed in New York, for example, there's no way you could transfer that. Hopefully that makes sense.
They just stay in the same markets. Yeah, awesome.
And I think that's where we'll probably talk about this further in our conversation. That's probably where the ETF kind of provides a lot more value to investors, where it gives them access to those over the overseas market without the need to involve the stock transfer. So you could have access to stock that's listed in New York, provided that there's an ETF in your market that has exposure over that stock.
Yeah.
I really like this next one because I've gotten way too many letters in the mail. But when you've lost the original paperwork asking you to register your shares with the registry and giving the option to do the dividend reinvestment plan, where do you go to find this information again without the letter?
Yeah, look, I think if you go to Investor Center website at Computershare, we have gotten rid of most of paper-based forms, right? So almost every transaction that's required by the registry, whether that's the provision of tax file number or banking details so you can receive your dividends, or in this case, the election to participate in DRP, you can do that online. So if you go to Computershare Investor Center website, and if you search for DRP, what will happen then for a particular company or ETF, for example, what we would normally do, we would also append the DRP rules there. So you'll be able to read the terms and conditions about that reinvestment plan for that particular security and tick yes, and be able to actually apply that electronically without having to complete any forms. So what we normally do during the onboarding, so once the investor goes and buys securities through their broker, we do an onboarding process through what we call a new shareholder pack. So we'll send a welcome letter to an investor, say, welcome to this investment. And then we'll provide a link that takes you to our website where you can provide all this information at that point. If you have lost that paperwork, no need to worry. You can still go back at any time and go to our website and still undertake the same process going forward. And if you go to our website, you'll be able to see the drowning person thing where it tells you how much of the information you've given us. So if that person is fully drowned, means you've provided all information. If not, then it'll let you know what's needed.
Person thing. Awesome.
Yeah.
I haven't logged in for a while, apparently. I'll have to have a look.
So we've got that sorted there for you.
Awesome.
So let's just maybe take it back just a little bit. So Computershare is the largest share registry in Australia, and it holds some of the biggest ETFs, actually. Can you talk about what are some of the biggest ones you hold? What are some of the insights in them as well?
Yeah, absolutely. So we are very privileged to be the largest ETF service provider, and also we're very privileged to be managing some of the largest fund managers in the world. At the moment, we manage about 150 ETFs, and we are the only registry provider that has coverage over all asset classes, ETF asset classes on offer here in Australia. So that has given us a lot of visibility on the ETF registry. And also given that, we've got footprints across most major market in the world, what that has allowed us really as a share registry, and given Australia is a late mover when it comes to ETF, is really kind of import some of the best practices from other markets. So we're very privileged to be in that position. I think what I'll do, just to kind of paint the picture, is to kind of explain very briefly how different our market is, which then kind of will probably explain what, some of the visibility that we have on the data. So Australia is probably the most, when you look at the market structure in Australia compared to other markets within the developed world, is probably one of the most transparent markets, the most transparent, and I'll explain why. In the US, the relationship, so the interaction between the issuer and the end investor is very intermediated, and I'll explain why. So in the US, an investor will invest through their broker, as per usual, and then the broker will interface with the share registry, and the share registry obviously will interface with the issuer. So the investor and the share registry are one or couple steps removed from the end investor. So if Computershare is a transfer agency or a share registry in the US for a US listed company, what we would see in our register is the broker, but we wouldn't know who actually the investor is. Very intermediate. It's the broker that has that visibility. If you go to Europe, it's the same model, but instead of a broker, you've got custodians that sit as a conduit there in the middle. And most of Asian markets are either modeled of US or Europe. Australia is the only market where in most of the positions is the end investor that sits there. So look at the ETF, 75% of all the records in the register are end investors, and about 30 to 35 are intermediated by custodians. So we've got an amazing visibility on who the end investor is. As a result of that, especially in ETFs, we'll be able to actually identify a lot of behaviors and trends that I think are very interesting. I think that's some of which have already been kind of explained in our report, but I think that explosion of retail investors in the last few years is one of them. And also, I think there's a lot of millennial sort of investors that have come into ETF, which is predictable, which in itself is a very interesting market because, it's a very fragmented demography, so to speak. It's very easy to say we've got millennials here, but it's not a one size fits all because they're very different in their own rights, right? So, and really, if you look at how things are changing at the moment, if you look at the US, I think at the moment about 45% of the workforce are millennials. They're the change of guard, right? As the baby boomers are retiring and the Generation X are kind of heading into the autumn of their careers, so to speak. You've got the millennials taking over. In Australia, they're predicting next 2 years, 75% of the workforce will be millennials, right? And the millennials, if you think about it, they grew up in Australia in particular at the time where Australia went through the most amazing economic growth, right? So they're a little bit sheltered, right? And they're also the first generation of internet nomads, right? So they're very internet savvy. They don't really want to hear advice and they really trust their peers, So if Natasha, I'm following you or the influencer I'm following you, I will take whatever you tell me as a gospel. So, right. So they get a lot of, they really trust their
Tash
peers.
is younger than the millennials.
I'm still technically Gen Z, but most of my followers are millennials.
Yeah. All right. So you see, so they trust their followers, they trust their peers more. So it's a very different generation. I think issuers probably need to kind of bear that in mind. There's a change of guard. There's a change of guard that's happening between our eyes. So the approach and what we see in the behaviors of these investors in the data is interesting. And this year, and stay tuned, and hopefully if we get a chance to come back later in the year, I might be able to share some more insight. We're doing a bit of work to try and do a deeper dive on this segment. So what we are seeing then is investors that are a lot more impatient in holding off some of the, of the cyclical sort of fluctuations of the market, right? And very quick to cash in if they make a bit of profit. So we see a bit of that. And also what we're seeing is one of the things that the data is telling us is the asset utilization, how investors utilize that. Because normally, and I've watched a couple of your episodes where you're quoting some of the issuers who are recommending which funds or which ETFs to be held with what in trying to build a portfolio. Most of the issuers will provide a general advice. Okay, we think this asset class needs to be held with this asset class without providing financial advice, which is understandable. But the data is telling us investors, especially in the retail segment, are doing some strange things in terms of how they invest. Sometimes you see holders holding ETFs that were not designed to be held together, right? So that tells me that investors are maybe listening to their peers, I don't know, or maybe they're just getting information elsewhere. So we're seeing some strange things.
Do you have an example of that, of ones that shouldn't be held together?
I can't really provide that because I'm kind of veering very close to providing.
I've seen this as well when people are like, I own like A200 and IOS and VAS. And it's like, why all three of them? Or then I hold VDHG with them inside as well.
Absolutely. And that leads me to the next point. So I did some sort of, we did some sort of analysis recently, just for the sake of it. We just wanted to see, because ETFs is relatively new phenomenon in the market. I just wanted to see what sort of single stock investment ETF holders had prior to investing in ETFs, and then overlay that with their ETF and just to see what are sort of cross pollinations are there. And what we find out is in some cases, you would see an investor that may have invested in a number of individual stocks, and they'll go and invest in an ETF that has exposure over those stocks as well. And their superannuation fund may have invested either in that ETF or those stocks. So when you lay all that together, they become really overweight in those stocks. And most of retail investors don't have the tendency to reevaluate and rebalance their portfolio. So they may just continue to do this and kind of put themselves at a risk of being overexposed over certain stocks. So those are sort of behaviors that we are seeing, which tends to kind of point to the fact that investors are kind of just investing randomly. Some of the investors, not all.
I felt that before when you're trying to figure out what to buy. It's like, I'll just pick one.
Yeah.
Or I'll pick them all, right? Like that was the mistake Tash and I did, right? Like we were like, we'll pick them all. And I think what you're talking about is just how much overlap we often hold in our portfolio, not only the shares or ETFs that we've chosen, but also our super fund, right? Like that's an additional layer that people haven't considered. I think like you've done an amazing research paper, I think recently, that you've also found that Australian investors prefer domestic ETFs as well, having like a home bias. Like I'm sure that kind of falls in the whole overlap that you're seeing.
Yeah, look, and I think maybe just make a passing comment that none of what I'm saying is a financial advice. It should not be taken as such. People need to go and seek their own independent advice.
We have all the disclaimers.
Yeah, absolutely. I just wanted to reiterate that. But yeah, I think what you've just mentioned there, Ana, is true not just in Australia, but also globally. And people always tend to invest on stocks that they know of. And so that domestic bias is a real thing. But I think what ETF has done has provided investors with an opportunity to get exposure over international equity as well, that they didn't have access to prior to that, which is probably the point of one of the questions that you raised earlier, right? So at the moment, you could invest on any stock that are listed in most of the major stock markets around the world using your local broker and exposing yourself to a local tax regime. So it's really kind of has democratized that access to those international shares. Prior to that, if you want to say to access US stock, you have to find a broker that can actually trade on those stocks. The fees will be a bit, higher. And then to make it worse, you'll be exposed to foreign tax risk there. At the moment, you don't have to do that. You can just buy ETF like you would buy any other domestic stock, be exposed to local tax regime, and at a relatively low cost. So that is really great. I mean, that bias will probably go away over time, but there's still also you could argue that, some of the domestic ETFs have done really well. So that's been attractive to issuers as well. So that may be the point.
Franking credits a big reason for why people favor Australian investments as well?
One of the reasons, yes. So you've got all those tax benefits by having a domestically domiciled ETF that has exposure over all these stocks that are either domestic or overseas. And also, I think what ETFs have done as well, in my opinion, I think it has introduced a new breed of investors in the stock market. And then I'll explain what that means. So, I mean, normally, you have a group of people that believe in the stock market, they will invest in stock market and so on. But because ETFs, and especially you've got issuers that have come up with some really interesting asset classes there that, give exposure to investors to products that are not traditionally listed on the market, right?
Like what, for example? What's an interesting asset?
Bitcoin is probably an example of that, right? So where you'll have someone that may be interested in that concept of investing in Bitcoin, but they want to trade in a market that is well regulated, and the ETFs kind of provide that platform. So that is introducing a new breed of investors that wouldn't otherwise be trading on the stock market, and therefore kind of helping the financial markets here as well. But that goes just beyond that. We've got asset classes such as fixed income, that is attracting investors that want to get exposure to, bonds and other fixed income products through ETFs, which is traded like any other stock. So that is one of the positives of ETFs, if you ask me, in terms of kind of bringing the new generation of investors out there. And I think our market, as it matures, as we see issuers bring a lot more thematic ETFs, we're going to see different demography of investors coming into ETFs as well.
You just said there are all the positives of ETFs. Do you see there being any big cons to ETFs? Yeah,
look, I think the ETF, just like any other securities traded market, has its own risks, really. Just because it's a product that is traded on the market, is exposed to risks just like any other stock there. But I think investors need to seek their own advice, because each person really is different. So people need to take into consideration their own individual circumstances. That's probably all I can say.
There was so much good information in all that stuff you just said. But one of the things is, why didn't Australia follow the US model? Like you're saying, we're really a lot more transparent here. The US isn't, the UK isn't, Europe isn't. Why did we do something different here?
Because you were talking about the custodial markets too. And I don't know if we specifically defined what custodian is versus what we do here in Australia. So maybe it's also good to just start there.
Yeah, like I think to Tasha, to answer your question, I think, that's just when the market was set up there. I think the people were modeling the market just saw fit to set up that way. And I think it was quite revolutionary, in my opinion, just to set the market that way, because having that transparency, I think, is good, in my opinion. And it's great for issuers as well, because if you think about it, issuers have exposure especially for ETFs, about who's investing. And if they know what investors want, they can come up with product that is suitable for the investors. So it's a win-win situation. And kind of maybe just to add some more color there, what Computershare has done, really, because we, for lack of a better word, we are a neutral party when it comes to ETF. We are not product sellers. We're not product buyers, right? So we sit in the middle of that. So we're in a really incredible situation to actually help the buy side and sell side by kind of providing the information to issuers and potentially to investors through issuers, so that we can grow the size of the market, right? So what we're doing with our research is to really kind of advise our issuers, okay, here's what investors are behaving, here are the upcoming trends on the ETF, so that when you think about coming up with new products, you need to take all this into consideration. And hopefully there'll be a good balance there where they'll come up with better products that will help investors grow their wealth. I think that's kind of how we position ourselves. And the research that we've done is intended to do that way, and we're intending to actually build on that in the years to come. So watch that space. Now, trying to answer your question, Ana. So in Australia, you can either, there's kind of different ways to set up your holding position when you register your holding on the share market. The most common, as I said, is to register under your own legal entity, which would be your name. Tash, Ana. You can sit and register under your own name. You can register under a company name if you want to trade as a company, so trading under your institutional kind of position. But also you could register under a custodian, so nominate a custodian to represent you. So the custodians in our ETF book represent about 30 to 35% based on holder numbers, not necessarily value, but holder numbers. And most of the time, it'll be overseas investors who want to have access, ETF products in Australia that may use a custodian to invest in Australia, or institutional holders that want to trade in Australia may use that. So most mom and dads, retail investors will just be under their own name. Most self-managed super funds will be under their own super fund entity. It'll be overseas holders or institutional holders that would use a custodian. I hope that makes sense.
I've never even thought about overseas people investing in Australia, but that makes total sense, especially if you're trying to be in other markets and having a diversified portfolio.
When you're talking about custodial, like in Australia, we've got CHESS-sponsored brokers and then custodial ones like Superhero and Sharesies and stuff like that. When you say the 30%, does that also include those brokers as well, like Superhero, Sharesies? Is that part of that 30%, or are they still registered under their own name?
Yeah, look, I think the brokerage firms, if they're trading on their own Chase-sponsored holding, they will have their own holding under that a brokerage sort of ID. The custodians that I'm talking about, these are nominee companies that are intermediary between the beneficial owner and themselves.
Yeah. It's interesting how many more people use CHESS-sponsored then, because there's kind of this argument going around whether you should use a CHESS-sponsored broker or whether it's a waste of money and you should just use a custodial one. So it's interesting to hear that so many more people are still using CHESS-sponsored.
Yeah, look, I think maybe I might need to clarify a little bit just to remove any doubt there. So the custodial model that you're talking about here. So, when it comes to, you're probably kind of referring to retail trading platforms and the models they're using, right? So retail trading platform, they have two models where they can either hold a position under what we call an omnibus position. So they're using one hen and all the beneficiaries sit under that hen, almost like an umbrella position. And then you have others that use what we call 1-for-1. So each account holder will have their own holding, right? And that's the model that we see on our register. So that's different from what I'm talking about. What I'm talking about is where an investor may not be using a retail trading platform, but they want to have access to the Australian market. They don't want to register their own name, which they can, and they choose to use a specialist nominee company to hold that position under their name. And most of these nominee companies would use an omnibus platform as well, where they'll just have one hen with a broker ID, and then all the beneficiaries will sit there. You may have layers of beneficiaries. So you may have a custodian, and underneath that, you may have another custodian who may then have beneficial holders.
Right.
Great.
So it's
all the behind the scenes we don't think about.
It's a little bit complex, but I think the beauty of that is that for the majority of positions in Australia is 1-for-1. So the end investor kind of sits on the register there, which is very helpful in our analysis anyway. In the data kind of intelligence that we do here is really great. And also it's good for issuers as well to create that sticky relationship with the investors, right? So if you're an ETF issuer with 10, 15, 20, 30 products, and Tash and Ana are my valued investors. They bought 2 of my ETFs, but I want them to invest in 4 or 5 more. There's an opportunity there for Computershare to make that connection, to do a bit of matchmaking there and connect you the buyer and seller, which is exactly what we're doing, really. And the Australian market structure allows us to do that.
I could just imagine all the insights and data you have on specific, retail investors, mom and pops, me and Tash investors, like a lot of interesting information. I think I read also in your research around ethical ESG investing and just a little bit of an uptick on that. I'd love to hear just a little bit more of what insights you have with your data in regards to that as well.
Yeah, look, I think ESG is very thematic at the moment, right? And it's great. I think it's great. And what we see from our data, there's a lot of retail investors investing in ESG. So part of what we do in our analysis, we look at, retail investors that have invested ESG versus what we call other. And it was almost like 64 to 34% in that split. So there's a lot of adoption of that product from the retail investors. And I think maybe if I can take a step back, what I think we will see going forward, and this is based on what we've seen happening in the US, because the US is a reflection of what will happen in Australia in the future, right? There's a bit of a lag effect there between the US and Australia. And normally what happens in the US in the last 10 years will most likely happen here from the ETF point of view. So we've got a bit of a kind of benefit of foresight there, if you like. And if you look at the US a lot, there's quite a lot of thematic ETFs that are targeting certain segments, right? If you look at just millennials, there's a lot of really quirky, awesome thematic ETFs that are, there's I think maybe a Global X millennial ETF that is really, as the name suggested, is targeting companies that are set to benefit from the spending power of the millennials as they get into a workforce. There's a ticker there that has a pretty cool ticker name called YOLO, right? And you can imagine who that is targeting to as well. And, there's a lot of kind of thematic ETFs there on AI, AR, and so on and so forth. So I think what we'll see in Australia, apart from ESG over the years, potentially, is really kind of issuers becoming a little bit smarter and building this thematic smart beta ETFs that are intended on certain segments of the market, whether that's millennials or certain other people. Because what thematic ETF does, similar to ESG, is appealing on the hearts of mind, is really kind of appealing on people's own principles and what they believe in and so on and so forth, right? So you kind of get a bit of both worlds. Kind of get, I'm investing on ESG because I believe in ESG, but also I'm looking to build my wealth on that. It's not just a philanthropic sort of investment thing. I'm not investing for the house, but also for gains as well. So issuers have been very clever in kind of bringing products that are intended to give investors that, returns that they're expecting to do, while appealing to their own kind of conscience, so to speak. So ESG has been great. The adoption is really good. And I think from an investor's point of view, you kind of benefit from the fact that you've got a professional fund manager that has done all the screening for you. And then and then you kind of deep in the heart in that. But I think we're going to see a lot more, an influx, a lot more thematic ETFs coming into our market in the long run.
So I just looked up YOLO. Did you look up YOLO, Tash?
I was Googling the millennial one.
Yeah.
I looked up YOLO cannabis ETF, which I have a lot of friends in Canada, where marijuana is legalized, have invested in a lot of different cannabis ETFs. Yeah. So I'm not surprised.
Yeah. So it's really, so you see that there's a kind of, you look at those mature markets and how the product has evolved over that time. It's really incredible. And I think what I love about ETFs, well, I've been involved in ETFs for the last 17, 18 years, and really going back just 15 years ago, no one knew what ETFs were, right?
Yeah.
And when we went through the GFC, as soon as you mentioned a 3-letter acronym, people just ran for the hills, right? And to see ETFs kind of going mainstream, it just makes me really happy. I was at the gym the other day in the sauna, and as you do, people talk and so on. So this guy was sitting right next to me. He's a real estate agent. I thought he was going to sell me a house, but he started talking about ETFs. And I'm like, oh,
no way.
And I tell you what, he defined ETFs better than I ever could. So he started talking and trying to tell me about ETFs. And in the end, I think he convinced me. And I said, I'm sold. I might look into this ETF thing.
Amazing.
So it's really great.
Was it YOLO?
It wasn't YOLO, but it was the ETFs recommended were both my clients. So I was very happy.
Oh, good. Did you tell them afterwards, or were you just sitting nodding your head?
Yeah.
No, I didn't.
Wow, that's a really good idea.
Yeah, you're like, ETFs, I've never heard of them before.
Yeah. I said, did you mean ETFs or EFTs? Oh, ETFs.
Oh my God. Yes, those EFTs.
So it's really great. It just makes me really happy. And I think issuers deserve a lot of credit. I've seen them firsthand in the early days, just really grinding and trying their best to educate the market to a point now. I think we're starting to see the benefit of, just the ETF going mainstream. So that is fantastic, in my opinion.
Yeah, this has been such an informative and great chat. I know you've mentioned a lot of things from the ETF report. Can anyone go and find that and find out more?
Yes. So if you go to computershare.com.au, you'll be able to see our report there. But if you just Google Computershare ETF Insights, that will take you there. And there's a lot more in that report than what we've chatted about today. And obviously I'd be more than happy to get any questions from anybody at any time.
Yeah, awesome. I'm excited. I'm excited to see what other research you do in the future as well. Sounds like lots of interesting things coming up.
Stay tuned.
YOLO.
Stay tuned. I'll keep you posted for sure.
Not advice.
Yeah.
Beautiful. And where can people learn more about you if they're interested in connecting with you?
Yeah, look, I think on my LinkedIn, Ibrahim Hussein, I think I'm more than happy to connect with your followers. And, I'm not an influencer by any stretch of imagination, but LinkedIn will be good. But also Computershare, I think, if there's on contact us there, I would be more than happy to answer any questions about ETFs. And the other tip as well, for those investors or listeners of yours that have invested in ETFs that are looked after by Computershare, every time we send you a communication, whether digitally or via post, there's a number at the top. It's 1-300 number dedicated to an issue which comes to us. They can call us at any time and ask any questions. And we've got provisions to also refer them to clients if the questions need to be answered by ETF issuers. So that's a tip there.
Amazing.
And the other tip for issuers as well, if they want to do their bit in saving the environment, is to really kind of provide us with their email addresses so that we can communicate with them via email. So go online, go to Computershare's website, give us your email address, and all communications to you will be via email.
Amazing.
Thank you so much for being on the show.
We really this is great.
It.
Thanks for having me. Pleasure's all mine.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests or me at Ana Kresina.
This show was brought to you by Natasha Etschmann, who is an authorised representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorised representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.